Good day, everyone, once again. Yes, we are currently on short-term decisions. Last week, we started the topic, and we were able to cover some aspects of the topic. Zoom user, don't write on my screen. So we started with introduction to short-term decisions, and we said that short-term decision represent the application of marginal costing technique and the principle of relevant costing to analyze a particular course of action in making managerial decision. All right. So we said that anything you want to do under short-term decisions, you are expected to use marginal costing technique in conjunction with the principle of relevant costing to analyze the course of action. Okay. And we said there are two types of, anything you want to do under short-term decision must be critically examined in two different perspectives, right? You look at economic perspective, and then you also look at the qualitative aspect of the decision that is to be taken. And then, of course, we now said we discussed the areas of application of marginal costing technique. We started with deleting of a segment, okay? We said that deleting of a segment will arise where a company is contemplating or whether or not a particular segment should be discontinued, all right? And we said that particular decision will arise when the when the segment is operating at a loss. Only when a segment is operating at a loss is when a company may be contemplating on discontinuing or deleting the segment. Also, we said that under deleting of a segment, you are expected to analyze the situation or the segment in two different perspectives. We talk about the quantitative aspects and also the qualitative. We did not mention the qualitative. We stopped at the quantitative. We said that under the quantitative aspects, the most important thing you need to do is to compare, right, the sales value associated with the segments. You compare it with relevant costs of the segment, whether it will produce a positive or negative contribution using contribution margin approach or income statements. All right. So I repeat once again, when you are analyzing the segment that is to be discontinued, the most important thing you need to do is to carry out the economic analysis of the segment by comparing the sales value with the associated relevant cost of the segment, whether it will produce a positive or negative contribution to the organization. In our decision rule, we said that if the segment produces a positive contribution, the company should not delete the segment because it is actually contributing positively towards the recovery of the company's general fixed overhead and net profits. Once you have prepared your income statement for the affected segment and it produced a positive contribution, then do not delete the segment. But if it is negative contribution, that is, if the sales value is less than the relevant cost of making the segment, then in that case, it is better to delete the segment, which will then enhance the company's overall net profits. Okay. And we also said under zero contribution, what are you supposed to do? The company can either delete or not delete the segment depending on other qualitative factors. So this is where we stopped in our last class. Today, we are going to be discussing the qualitative factor arising from deleting of a segment. Then thereafter, we are going to have calculations. So I have plans. My plan is to complete deleting of a segment today. Then I will introduce make or buy decision. All other explanation relating to make or buy decision, we should be able to do it today, all things being equal. All right, so let's talk about the qualitative factors associated with deleting of a segment. So remember, you will recall what I said, that deleting of a segment should be analyzed in two different perspectives. The first one is economic angle, which we have done. That is, just compare the sales value with relevant cost of making the segment, whether it will produce a positive or negative contribution. The second perspective is qualitative factors. All right. So what do you mean by qualitative factors? We said that qualitative factors are the non-monetary aspect of the decision that is to be taken. It represents the factors that cannot be expressed in monetary terms. All right, they represent the factors that cannot be expressed in monetary terms. In relation to deleting of a segment, the following are some of the qualitative factors to be considered. The first one is to determine the impacts of the closure decision on the company's reputation. Okay, you want to know this particular segment that is operating at a loss. If you discontinue the segment, if you drop the sale of that particular product, right? If we close down the location in Ibadan, or the location in, the branch in Lagos, what will be the impact? For example, what will be the impact on the company's image or reputation? That is one factor you need to, before you make the final decision, all these qualitative factors should be considered. Number two, the perspective of the company shareholders to the closure decision should also be taken into consideration. How would the shareholders feel, right? You never can tell. It may be one of the shareholders that introduced the products that you want to discontinue, right? So you need to consider the perspective of the shareholders before the final decision is taken. Number three factor you also need to put into consideration is the impact of the closure decision on the company's overall turnover, vis-a-vis where the segment to be discontinued is jointly demanded with the company's other products. You have company A, B, and C. Company B, we have products A, B, and C. Product B is generating loss. Management is now thinking of closing down product B so that they can concentrate on product A and C. Meanwhile, product B and C are jointly demanded. What that simply means is that customer buy the two together. So if you say you are not producing product B again because it's generating loss, that means the sales of product C would be badly affected because customer will not patronize you. They want to buy the two together. Now that you're no more producing product B, they have to go to your competitor and buy, where they can buy the complete products. All right. So you need to consider the impact of the closure decision on the company's turnover, especially where the targeted or where the affected segments is generally demanded with the company's other products. Okay. Next, what will be the reaction? All right. What will be the reaction, and also the perspective of the reaction as well as the interpretation of the closure decision on the company's creditor? You never can tell. It may well be that is the creditor that have lent the money. They have lent the company the money to establish the particular segment. If you are no more producing, so how would they react? How would the creditors react to the closure decision? So you need to consider the reaction as well as the interpretation of the closure decision by the company's creditors. Next, you also need to consider the effect of the closure decision on workers' morale as it affects productivity level. All right. So when there is closure decision, when you close a particular segment, the workers that are currently operating on that segment may be retrenched, all right, or they may be redeployed. So if they are retrenched, that means you ask them to go, all right. The workers that are operating in the existing products, they are not going to, they will be emotional, right? They will feel the impact of that, the impact of asking their colleagues to leave because the product they are supporting or the segment they are supporting is no more. All right. So during that moment, those workers will have a low morale. When there's low morale, certainly there will be low productivity. All right. So you need to consider the impact of the closure decision on workers' morale as it affects productivity. Not only that, another point, another factor you need to put into consideration is how would the company manage the negativity that may arise from the closure decision? Okay, how would the company manage the negativity that may arise from the closure decision in relation to, all right, in relation to the workers union, all right, and the compensation in relation, in relation to the workers unionism, you know, especially in an organization where there are when unionism is allowed, right? Before before the company is able to close the particular segment, the union would have heard the rumor, you know. So they may prevent the company from carrying out that particular closure because the union are concerned with the welfare of their members. Therefore, it may bring about negativity. They may put it on social media, the potential action of the company, and then if at the end of the day the company end up closing the segment, so the company will need to settle the workers, need to compensate them. Therefore, how would the company be able to manage all those kind of negativity? All right. So that's another point. Another point is that if the workers are redeployed, are the workers going to be redeployed? If they are going to be redeployed, is the company going to incur any cost for training and retraining of the workers? Because if we ask currently they are managing a particular segment, that segment wants to be shut down. The company wants to drop that particular segment. So you want to redeploy them to another segment. As you are redeploying them, certainly the company will need to train them on how to handle or to man the other segment. So is the company going to incur any cost for training and retraining the workers if they are eventually redeployed? Okay, so these are the things, these are the factors you need to take into consideration under the deleting of a segment. Okay, so so that's that. At this point, we need to have an illustration. Let's have illustration to back it up. All right. Now, one more important thing you need to understand is that as far as deleting of a segment, as far as short-term decision is concerned, let me put it that way, right? Whatever you are going to do, whether examiner asks you or not, as you have done your calculation, you also need to vis-a-vis, you also need to do your side-by-side, you also need to do your qualitative factors. Whether examiner asks you or not, you have to do that. And when you are stating your qualitative factors, you have to link it with a question. Don't make your qualitative factors generic. Don't just memorize. Don't just cram what you have in your notes and dump it for the examiner. You can never earn your full mark if you do that. You have to link it with the question. You mention the name of the company as given in the question. You mention the product. Just link it. Don't make it generic. That's the point. All right. Don't just memorize and then you dump it for the examiner. It doesn't work that way. Okay. So that's that. So at this point, let me know if you have any question for me before we before we begin to solve questions. Do you have any question based on what we discussed last time and then right now? Okay. All right then. So let's have illustration. Go to your material with you. Illustration number one is Adigboluja. So I need you to open to your material at your end so that we can follow through together. All right. So as a way of updating you, it's been a while that ICAN tested question on deleting of a segment. It's been a while. We don't know what is coming. It's part of your syllabus, but you have to, it's not just about the exam you want to write. Even in practice, these are the things you can advise, you can recommend management on. Okay? So let's have this illustration. Who's going to help us to read? Who will help us to read? Yes, Joshua. Thank you.
Adigboluja manufactures 3 brands of ice creams: chocolate, vanilla, and strawberry. The present net annual income from this is, as shown in the table below. Okay. The company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. It is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 naira of the fixed cost of vanilla are direct fixed costs, which will be saved if production ceases. All other fixed costs will remain the same. Required: A. Should the company drop the sales of vanilla? B. Suppose, however, if it is possible to use the resources realized by the stopping production of vanilla and switch to producing a new ice cream, banana, which will sell or 50,000 naira,
We sell
which is sell
for
at 50,000 naira, and incur variable cost of 30,000 naira, and extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? What are the non-quantifiable factors that the management of Adigboluja should consider? Thank you.
Thank you, Joshua. Yes, that is the question. In the A part of this question, you are required to advise whether the company should drop the sale of vanilla. You recall what I told you last week when we started this topic? I mentioned that under deleting of a segment, the only reason that we make management to be contemplating on deleting a particular segment is if the segment is operating at a loss. Okay? When you look at the income statement given to you, you will notice that this company produces 3 different brands of ice cream: chocolate, vanilla, as well as strawberry, right? When you look at the information given under vanilla, you will notice that vanilla is operating at a loss. So there is a loss of 3,000 naira associated with vanilla. And that is why the company is considering whether or not to cease selling vanilla, because vanilla is operating at a loss. The reason why I'm emphasizing this is the fact that it is possible in a particular question or in a particular instance, examiner may not give to you the income statement that will show profit or loss. So once you can see from the question that examiner is asking whether the company should drop, or whether the company should cease, or whether the company should discontinue, or whether the company should delete a particular segment, one thing that should cross your mind is that that particular segment is operating at a loss. Okay, so if that is the case, let's solve the question now. You are required to advise whether the company should drop the sale of vanilla. So I will then come here, solution. Amen. Be careful. I've marked your face now. You are the one that will read the next question. Amen. Okay, so the name of this company is Adigboluja. Okay. Manufacture. Okay, Adigboluja. Just put Adigboluja. Next, and I told you that under deleting of a segment, there are 2 steps you are expected to carry out. In fact, 3 steps. The first step is to prepare income statements by comparing the sales value with the relevant cost of making the segments, whether it will produce a positive or negative contribution. Step 2 is for you to state your qualitative factors. Then step 3 is to advise whether the company should discontinue the segment or not. However, in this question, the qualitative factor is there in the C requirement, so there may not be need for that. So in that number A, examiner was specific, you are required to advise. Therefore, after you have computed you have prepared the income statement, then on the basis of that, you need to advise. So if that is the case, I would then say income statement. I can call it income statement or contribution margin approach. Okay. Now, like I mentioned, your focus is on the segment. Your focus is on the affected segment. Every other profitable segment is not required. It is that particular segment that the management is thinking of closing down that you are going to consider. Any other profitable segment should be ignored. Okay. So I will then say income statement for vanilla. Okay. So let's prepare our table. So under this, let me start a table. Let me do, should I do 2 or 3? Let me do 2. All right. So under this, the first item will be sales value. Remember, under deleting of a segment, you are supposed to compare the sales value with relevant cost of making the segment. So I will then go to the question, what is the sales of vanilla? The sales of vanilla is 40,000 naira. So here will be 40,000. Next item will then be relevant costs. We compare the sales with the relevant costs of making vanilla. Okay. So all relevant costs, all the costs that will be attributable to the production of vanilla should be considered. Direct material, direct labor, direct expenses, variable production overhead, opportunity cost, incremental cost, direct cost, attributable cost, specific fixed cost. Any costs that are directly attributable to the production of vanilla should be considered. Only the relevant cost should be considered. Therefore, I will then go back to the question. Here we are given variable cost. Variable cost is relevant, which is 25,000 naira. Variable costs include direct material, direct expenses, direct labor, and variable production overhead. So I will just say variable cost. 25,000 naira. Here will be 25. Okay, 1,000. I will go back to the question again. Any other relevant costs? From this table, there is no other relevant cost. Fixed cost is not a relevant cost. All right, any cost that will not change as a direct consequence of the decision taken is irrelevant. So fixed cost is not relevant, we ignore it. However, in the paragraph, examiner has told you that it is fact that selling price cannot be raised or reduced without adversely affecting income. 5,000 naira of fixed costs of vanilla are direct fixed cost. Direct fixed cost is relevant. You have to consider it. So we are told that out of this 18,000 naira for, out of the fixed cost of 18 naira for vanilla, 5,000 naira of it is direct fixed cost. Therefore, I would then come here, direct fixed cost. Who is the person writing on my screen? Stop it. Direct fixed cost. 5,000 naira. Okay. So there's no other cost again that relates to vanilla apart from that. So I would then find the difference. 40,000 minus 30,000, that's 10,000 naira. So the difference between sales and relevant costs, Ikechukwu, Kingsley, why are you writing on my screen? Let me stop sharing and reshare again. So this 10,000 is called positive contribution. This is positive contribution. Contribution represents the difference between sales and variable costs. Under short-term decision, contribution is also different between sales value and relevant costs. Okay? Note that. All right. Now that we have, the decision rule says that if it is positive contribution, do not delete the segments. But if it is negative contribution, your advice should be that the segment should be deleted. Therefore, I would then come here, advice. Here we have positive contribution. We then say, Adigboluja. Adigboluja should not drop the sales of vanilla. Why? Because it is contributing positively towards the recovery of the company's general fixed overhead, of the company's general fixed overhead and net profits. That's why they should not delete it. Okay. That's our advice. We then move to number B part of the question. You are told that suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, banana, which will sell for 50,000 naira and incur variable cost of 30,000 naira, an extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? So here, examiner wants you to prepare the income statement for banana, and you then compare your bottom line with the result of vanilla. So anyone that is higher will be the basis of your advice. Yes. Any Olonda, you talk to me.
Yeah, yes, sir. Good evening.
Good evening.
Yes, sir. I'm looking at the advice that we have just written down. You said it is contributing positively towards the recovery of the company's general fixed overhead and net profit. In the income statement that we have just done, in the contribution statement that we have done,
Yeah.
it is not it doesn't include fixed cost. It doesn't include general overhead. So to get net profit, we have to also consider general overhead.
You say which one? This table? This one?
Yes. Yes,
That it doesn't consider, it
it's
doesn't
only
include what?
overhead, general overhead.
Why do you want to put that? Are you doing profits?
Okay, now, but in the advice you said it's contributing towards positively towards the recovery of the company's general fixed overhead and net profit.
Okay. Just pay,
But in the calculation,
I understand your perspective. Just pay attention. Now, first thing first, you need
okay,
to understand there are modes of operating a particular concept. So as far as deleting of a segment is concerned, what you just need to do is to compare the sales value versus relevant cost of the segment. You don't consider fixed cost. Fixed cost is not relevant, is not a relevant cost. So in my explanation, in my advice here towards the recovery, when the company is preparing its income statement, its main profit or loss accounts, that's what I'm trying to refer to here. So the general fixed overhead has already been incurred. This general fixed overhead of 18,000 naira, out of the 18,000 naira, we are told that 5,000 naira is direct fixed cost. That means the balance of 13,000 naira is general fixed overhead. So if you delete, what we are saying here is that if you discontinue producing vanilla, so the contribution of that 10,000 naira has already reduced the total fixed cost. It has contributed 13,000 from this fixed overhead of 55,000. Whether the company like it or not, you've already incurred this 55,000 naira fixed overhead. So the share of products, the share of vanilla out of this 55,000 naira is 13,000 relating to general fixed overhead. So if you remove vanilla completely, that means the entire products are the one that will bear the burden. You can imagine if this company only has 5,000 naira profits now. If you now remove completely, if you remove vanilla completely, that means the company will be making loss. That's the implication. And that's why we're advising that once you have a positive contribution, that should be your basis of advice. The company should not discontinue it because it is contributing. And in this case, vanilla is contributing 10,000 naira towards the recovery of the company's general fixed overhead. So that is what you are supposed to do. I believe that is clear.
sorry, yeah, yeah, it's clear. But I still want to get something right. It's clear, but in the general statement that is up there in the table, you will see that we
Yeah.
also use vanilla's variable cost.
Uh-huh.
So if we delete vanilla, we are the variable cost that we use in the general calculation will also not be there.
Mm-hmm.
If you look at vanilla's variable cost, which is 25,000
Uh-huh.
naira,
Uh-huh. Uh-huh. So what about it?
did you get it, sir? So it will
What
still
about
not,
it?
it will, that's what I'm saying. It will also reduce the general cost, both relevant and irrelevant, that we use in that table.
That's not the point. The issue is that your focus is on contribution. Have you forgotten this
Okay,
vanilla also have a sales of 40,000?
okay,
So
yeah, it's true.
the focus is on the contribution. So this contribution is
All right.
your vocal point. Once your contribution is positive, do not delete. Remember, under the operating statement that we did as our first topic, we said that marginal costing approach is an accounting system whereby the period costs incurred are written off fully from the aggregate contribution. It is from this contribution you are going to less your fixed costs. So if you now delete the product, if you delete vanilla, that means the company, this 10,000 will be a burden on other products because it is other product that will bear it. So at all time, your decision is on contribution. You don't consider fixed cost. Fixed cost is irrelevant. I believe that is clear now.
Yeah, very clear, sir.
Yolanda. All right. So the number B part of the question of the requirement, examiner is asking you that, okay, would your earlier decision in here above remain the same? All right. If the company switch the resources of vanilla to produce a new ice cream called banana, which will sell for 50,000 naira, that's the sales value, and incur variable cost of 30,000 naira, and then extra direct fixed cost of 6,000. So what the examiner is simply asking you to do here is to recalculate, is to prepare your income statement for, you should prepare income statement for banana using the information as given to you. So in this case, the sales value, according to the question, for banana is 50,000 naira. You then compare this with relevant costs of making banana. What are the relevant costs? We are given variable costs of 30,000 naira. Is it 30 or 35? I think it's 30. Let me check.
30.
30,000.
Yes, 30,000 naira. Yeah. So we also have direct fixed costs.
6,000.
Direct fixed costs of 6,000 naira. So the difference between the two will then give us 14,000 naira contribution. Okay, this is positive contribution. So you then compare. When you switch the resources of producing vanilla to producing a banana ice cream, the company will earn a positive contribution of 14,000 naira. So what should be your advice? The contribution of vanilla is 10,000. Contribution of banana is 14,000. So our advice should be that the company should switch resources of producing vanilla to producing banana in order to earn additional contribution of 4,000 naira. That is the difference between 14,000 and 10,000 naira. So you then come here. The company should switch resources of producing vanilla to producing banana ice cream. Banana ice cream in order to earn extra contribution or additional contribution, in order to earn extra contribution of 4,000 naira, representing the difference between 14,000 naira and 10,000 naira. Okay, that's that. Yes, Shola, talk to me quickly.
So good evening, sir.
Good evening.
Now I am thinking critically now.
Yep.
According to this second our B part,
Yep.
and we are just written that the company should discontinue the that was A part. Now, if we look at it from the angle of what we discussed before we started this calculation, the non-quantitative aspect of,
Yeah.
are we not looking at it from that angle that it will now take some time for this banana segment to begin to maybe people start, get familiar with the product, um, comparing with vanilla. Are we not thinking in that direction? That's
You
my
mean the
question.
qualitative factor?
Yes, I'm saying that because both of them have produced positive
Are
contribution.
you talking about the qualitative factors
Yes, I'm
before we
relating.
discontinue vanilla?
Yes, I'm relating this this B part to the quantitative factors now. That wouldn't take some time for customer to relate with this banana
And
of
so
a
that's what you
segment.
should do now in the B in this. That's what you should do in the C part. Examiner is asking in C, what are the non-quantifiable factors that the management of Adigbolija should consider? Now that you want to discontinue vanilla, what are the qualitative factors? So what you just mentioned now should be part of what you are going to discuss in C. All right.
Okay.
So if this number C requirement is not there, as you are advising in this B part, you have to consider all the qualitative factors, but examiner has given it to you as part of the requirement. So, yeah. Are we fine, Shola? Hello,
I'm okay,
Shola?
sir.
All
I'm
right then.
fine, sir.
All right, so qualitative. So all of us, we are going to contribute to this, qualitative factors. We are going to contribute to this. Don't just talk randomly. If you know anyone, just raise your hand and I will write it down for you. The following qualitative factors. Is it quantitative, examiner call it, or quantifiable? Non-quantifiable, okay? Non-quantifiable. Okay. So the following qualitative factors should be considered before final decision is taken on whether to drop the sales of vanilla. Okay. So if you know it, what are the qualitative factors we need to consider? Remember, let me start with one so that I can remember what I told you earlier today. Anytime you want to state your qualitative factor, you have to link it with a question. Don't make it generic, right? You link it with a question. That's what examiner is expected of you. Don't send me the chart for the qualitative factor. So you raise your hand, then you speak up so that everybody can hear you. Then I will write it down for you. So like I said, let me start. So what will be the impacts of dropping the sale or the impacts, let me put it this, don't let me make it a question. All right. The impacts of dropping the sales of vanilla on the company's overall turnover should be considered. All right. Especially if vanilla is jointly demanded. If vanilla is jointly demanded with chocolate or strawberry ice cream. Okay, so you can see I did not just copy from the notes as you have it before. I'm linking it with a question. I'm calling out other products like chocolate and strawberry. All right, so I'm linking it with the name of the with a company. All right, so this is what examiner want to. Don't just say that the impact of the closure decision on the company's turnover should be considered. That is generic. Other students can do the same thing. But you, as you are answering the question, as you are stating your non-quantifiable factors, you have to link it with a question. Number 2, yes, Shola, talk to me.
So, like number 2, if there's anything
Yeah.
like that, I will talk about taste.
You talk about what?
Taste. The taste.
Taste, customer taste and preference. Okay.
Yes.
What about it?
So it will actually take them some time, as in the customers now. It will take them some
To
time
adjust.
to adjust to the new product. So in relation with the taste.
Yeah. So you have to consider the perspective of the customers as well. Like you mentioned, Shola, you know, the ice cream flavors taste differently. The taste of chocolate is different from vanilla, is different from strawberry. Like for me personally, when I used to eat ice cream, I like vanilla, So if you now say you are no more selling vanilla, what will happen? That means I will not come to your company again. I will go and buy elsewhere where I can get my taste, So customer taste and preference should be considered, right? So let's put it this way. The customers' taste and preference in relation to vanilla ice cream should be considered. Okay? Should be considered. If you don't want to go further, you can then say this is because it will take time for for vanilla customers to adjust to a new taste. All right. If you want to do that way, so fantastic. Yes. Who again? Shola, you want to say more?
No,
Yes,
sir.
Shola.
No, sir.
Okay, you are
No, sir.
still raising hand. Yeah.
Oh,
Yes, any other?
Another one is the overall effect of what the impact will be on the workers.
Workers' morale. Okay.
It
You
can,
can then say
when discontinue of vanilla, it can make the workers to be redundant, or it can lead to this
okay.
unemployment.
Okay. So you are still talking about workers' morale, right? So
Yes, sir.
Adigboluja should consider the effects of dropping the sales of vanilla on workers' morale, especially or vis-a-vis productivity level, or you can say as it affects productivity level. All right, because the current workers on chocolates as well as strawberry will become apprehensive of job loss. You can just put it there. This is because the workers operating on chocolates and strawberry may become apprehensive. They'll be afraid, apprehensive of job loss. So their thinking is that, which is natural, we are human, you know. Now they're asking the workers operating under vanilla to go. For example, we that are operating on chocolate and then strawberry ice cream. Tomorrow the company may come up to say that, okay, they are no more producing chocolate. What will be the what will be the impact on me too? So one day the company can come up to me and say, okay, you two should go because they are no more selling chocolate. So they will become apprehensive. During that moment, of course, there will be low productivity. All right. So that is what we are trying to say here. Let's add one more. Yes, Valentina, talk to me.
All right. Thank you very much, sir. So I would want the company to consider the cost that they will incur in training the staff who will be moved from producing vanilla to banana in one instance.
Okay.
And also the learning curve, because not just training them, they might take time, because this might be people that have mastered the act of making vanilla. So it might take a while for them to get the right taste. So that's what I want the company to consider, because they might be losing money while they're perfecting that. And also the training cost.
Yeah, you're correct. So let's put it this way, is Adigboluja going to incur the costs of training the workers? Is Adigboluja going to incur the cost of training or retraining? Let me put it this way, training or retraining the workers if they are redeployed, to other segments like chocolates or strawberry. Okay. Or you can also put it this way: does Adigboluja have the capacity to accommodate the cost of training or retraining the workers if they are redeployed to other segments like chocolate or strawberry? So we need to consider that as well. Yes, Shola, talk to me. Let's add one more.
So I was thinking in that direction, that additional cost. But my own is from the authority, from the relevant authority like NAFDAC. So moving from one segment to another, and it's going to require another, additional cost from this relevant authority.
Moving from where?
I was saying that if we are moving from one segment to another segment, okay, we've been producing vanilla before. We want to be producing banana now. The relevant authority, they are going to come in also for approval. That's what I'm trying to say here. So they're going to come in for approval that, okay, this is what we have been doing before. You are doing another thing entirely now. So we are coming here to inspect, to do every other necessary thing before we can give you the approval. And it's going to cost the company, additional cost.
Yeah, well, that can be, you can borrow that as part of the commentary, but it is believed that just is a way of vanilla ice cream, it's just a flavor, right? So introducing a new one, which is banana, of course, the regulatory authority can come in to for testing and to confirm that you have the right capacity and the facility to be able to absorb the new products or the new brand of the ice cream. Yeah, you can bring it in. Yeah, there's nothing bad in that. Of course, the fact that you're even relating it with the question, we also can hand you that mark. Examiner can look in that direction, by saying that you are bringing in regulatory authority as part of your commentary. So it's a plus. Yeah, we can do that. So let's stop at this 4 because of time. Okay. All right. So that's that as per the question. Then let's have another illustration on this. Okay. Let's have another illustration. Illustration number 2 from your learning material. That's Ife Sinachi Limited. Yes, Imem. I know they forget to. You make noise in my class earlier. Imem, read. Imem, eat it. Imem. Are you there, Imem? Okay.
Good.
I guess she's. Oh, okay.
Good evening,
Go
sir.
ahead.
Can I go ahead?
Yeah,
Okay.
Good evening. Yeah.
Illustration 2. If a Snatchy Limited, making a single product, has a factory in Lagos and distributes the product through 3 depots in Lagos, Benin, and Kano, it is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales being spread as follows. Lagos, 70,000 units. Benin, 20,000 units. Kano, 10,000 units. Standard costs of production are direct costs, direct wages, direct factory variable overhead, factory fixed overhead. The cost of selling and distribution include by the depots are estimated as follows. Fixed costs given in the table. Variable selling cost expenses. From the budget, the business prepared for this vehicle. Management is considering desirability of closing the depot and selling organization in Benin and Lagos. If this is done, it is expected that all sales in these areas will be lost, but that sales in Lagos will remain unaffected. Required: prepare budgets for the business from the figure provided, indicating why management is thinking of closing the depot in Benin and Kano. Redraft the statement prepared above using contribution margin approach. Prepare a statement using historical approach to show the net profit of the organization after closing down the two depots. Advise the management based on the income statement prepared above.
All right, thank you, Imam. That is the question. Okay.
Welcome, sir.
Examiner is asking you in the A part of the question to prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. All right. So management is thinking of closing the depot in Benin and Kaduna. So examiner says you should prepare a budget. What kind of budget would that be? Like I mentioned to you, the only reason that we make company to be thinking of closing or deleting a segment is if that segment is operating at a loss. So in this A requirement, examiner wants you to prepare income statement that will show profit or loss. All right, that is what the examiner is. So that's what the examiner is asking you. That's why you have to show, you have to indicate why management is thinking of closing down of Benin and the Kaduna depot. So if that is the case, the name of this company is Ife Sinachi Limited. The first thing you want to do, number A, is to prepare income statements. This income statement does not relate to any of the segments. It does not relate to either Benin or Kaduna. It's for everyone. You want to prepare the income statement for Ife Sinachi Limited to know the reason why the company is thinking of closing down Benin and Kaduna depot. Okay? Therefore, I will create my table for this. I have 3 different segments, depots. Okay? So, Lagos, Benin, Kaduna, then total for the company as a whole. All right. So the first one will be for Lagos. Next one is Benin. And the next one is Kaduna. Then we need to prepare the total for the company as a whole. So according to the question, the activity level in units. Okay, let me adjust this. Don't waste my time. Let me design my table. All right. Now, we are told that according to the question, we are told that the company has estimated that during the coming year, 100,000 units will be manufactured and sold at 20 naira per unit. The company is going to manufacture and sold 100,000 units. at 20 naira per unit. The sales bring spread as follows. 70,000 units will be manufactured and sold in Lagos, 20,000 in Benin, then 10,000 in Kaduna. So the activity level in units, Lagos is 70,000, Benin 20,000, Kaduna is 10,000. Total for the company as a whole, 100,000. All right. So then you indicate your Naira sign. Let's restrict our numbers to thousands to make life easier. Let me just copy that. So we then start. We want to prepare income statements. We are starting with sales value. I will then go to the question, what is the selling price? Selling price according to the question is 20 naira. Therefore, we are told that 70,000 units will be produced and sold in Lagos. So 20 multiplied by 70 will give us 1,400. Let's follow together. Use your calculator. For Benin, let me bold these ones. So for Benin, 20 multiplied by 20,000, that's 400,000. For Kaduna, 20 naira multiplied by 10,000 naira, that will give us 200. When you add everything together, that will be 2,000. All right, so total sales for the company as a whole is 2,000. That's 2 million naira. Next, I will then consider relevant costs. So let's go and identify relevant costs in the question. Let's go back.
Direct material.
The first
Direct
item
wages.
is direct material, which is 4 naira 80 kobo. Okay. Here, direct material. At 4.8, 4 naira 80 kobo. Do we have direct labor? Yeah, we have direct wages, 3 naira. Direct wages, that's variable cost at 3 naira. Next, we also have factory variable overhead. There's no direct expenses. So variable overhead is 140% of direct wages. Variable overhead at 140% of 140% of direct wages. Direct wages. Okay. Let me put it this way. DW. All right. So what else? What are the other relevant costs? Factory fixed overhead is not relevant. Factory fixed overhead does not relate to any of the products. It's a general fixed overhead. All right. We're also given cost of selling and distribution. So fixed selling and distribution. Selling expenses is a relevant cost, whether it is whether variable selling expenses or fixed selling expenses, it is relevant because if you don't incur the selling expenses, you will not be able to make the sales. All right. So any selling expenses is a relevant cost. You have to consider it. So we have fixed selling expenses for Lagos, Benin, and Kaduna to be 80, 50, 30. Fixed selling expenses. All right. For Lagos, 80, 50, then 30. When you add it together, that's 160. Okay. What other expenses that is relevant? Variable selling expenses. Lagos is also a relevant cost. Variable selling expenses. We are going to do working for that. That will be working number 1. Okay. So I will then come here. Working. Working number 1. Variable selling expenses. So according to the question, we are told that variable selling expenses for Lagos. Lagos is it 8% or 10%? Lagos is 5% of sales value. So here is 5%. Who is the person? Chairman with Daisy? Be careful. So the sales value, we are told that variable selling expenses is 5% on sales value. Sales value for Lagos is 1,400. Therefore, 5% of 1,400 is what?
70.
70. Then for Benin,
That's 32.
I think that's 8%, right? Yeah, 8%.
32.
8% multiplied by 400. That's 32. Then for Kaduna,
That's 20.
Kaduna is 10% of 200.
200.
That's 20. So total would then be 122. Okay, so let's go and put it down. Here is 70, 32, 20. That's 122. All right. So at this point, let's determine the total direct material cost. 4.8 multiplied by 70. What do you have?
That's
Oyinda,
336.
336.
For
4.8
Benin,
multiplied by 20.
96. For Benin, 96. Then for Kaduna, 48.
Hold on, Oyinda. Chioma Odeze, please mute yourself. Chioma, mute yourself now.
Okay, sir.
Sorry, Oyinda, please, only you should be giving me the number for now. So go ahead.
For Kaduna, 48.
48. So
Total,
total,
480.
480.
Yeah.
So direct wages,
210 for Lagos.
210 for Lagos. Yeah, it's 210. Next.
60.
60 for Benin.
Yes, sir.
Next.
30.
30 for Kaduna. Total.
That's 300.
300. Next. Variable overhead. 140%.
Of direct wages.
140%
That's
of
294.
direct wages. So
294.
1.4 multiplied by 210.
210. Yes, sir. 294.
294.
For Benin,
1.4
84.
multiplied by 60.
84.
Pardon?
84, sir.
84. Next.
42.
Total.
420.
420. So let me just complete this. So we have considered all the relevant costs. So just find the difference for me now. Find the difference so that we can have our contribution.
410 for Lagos.
Lagos is 410.
Yes, sir.
Next.
For Benin, 154.
154.
Yes, sir. That's 30 for Kaduna.
Kaduna is 30.
Yes, sir.
Next, the total.
$518. 518.
518. 518. 410. Are you sure? Check your answer for Benin. Check the contribution margin for Benin. That 154 seems unrealistic.
Sorry, for Benin, I got 78.
78. So when you add it up, that's 518, right? So remember, what you are calculating is profits. You want to determine profits. You are not determining contribution. So it is from your contribution you are going to less your period cost. So you can then come here, fixed cost. Okay. So in the question, examiner has told us that there's a fixed, yes, we are given factory fixed overhead of 400,000 naira. That factory fixed overhead is not related to any of the depots. It's a general fixed overhead. Therefore, we are supposed to apportion it in order to determine your profits. Remember, we said that our profits is contribution less period cost. Therefore, we need to deduct the fixed overhead from the contribution margin in order to have the profit for respective depot. So give it to me. We need to go and do calculation on this. So this will then be working number 2. The general fixed overhead given to you. Let me come here. Fixed overhead. Factory fixed overhead. Okay. So you need to apportion this. On what basis are you apportioning the fixed overhead? Pay attention to what I'm about to say. In this question, the examiner did not tell us how we are going to apportion the fixed overhead. Therefore, you are going to look for something that is common. You look for the basis that is common to all the products or to all the depots. That is what you are going to use to do the apportionment. When you look at the question in the first paragraph, you are told that the company will produce and sell 100,000 units. Okay, so this 100,000 units is what is common to all the depots. Therefore, the sales for each of the depots will then be the basis of your apportionment of the general fixed overhead. If in the question you are not given the sales value, you are not given the sales unit, then in that case, you are supposed to use the sales value for the purpose of apportioning the fixed overhead. But because in the question it's very specific, 100,000 units is what is common to all the depots, and that 100,000 is splitted into Lagos 70,000, Benin 20,000, and then Kaduna 10,000. So that is what you are going to use to share the fixed overhead of 400,000 naira incurred. So I will then come here, apportionments or distribution. You can call it apportionment or distribution. What do you want to apportion? You want to apportion fixed overhead of 400,000. Okay. Fixed overhead. How much is it? 400,000. Let me remove this board. All right. It's 400,000. Then let me do it this way. What's wrong with you? So you now want to apportion the fixed overhead among Lagos. What's the share of Lagos? We are told that Lagos will manufacture and sell 70,000 units. So 70,000 divided by
100,000.
70,000 divided by 100,000. Then multiply by 400. Multiply by 400,000. Let me complete this one as 400,000. Okay. I'll put this one a little bit to the front. Then we do the same thing for Benin. Benin will manufacture and sell 20,000 of the 100,000. Then you multiply this with the total general fixed overhead of 400,000. So what do you have here?
First one is 280,000.
280,000. Then the second one,
80,000.
80,000.
The third one, 40,000.
Coming.
Everything will give us 400.
All right. So for Kaduna, 10,000 units will be sold. manufactured and sold out of 100,000. Then multiply by 400,000. So what do we have there?
40,000.
40,000. So that's that. So like I said, under this circumstance, once you have general fixed overhead that is not related to any of the products, all you need to do is to look for common factor. Look for something that is general or that is common to all of them. So that will be the basis of your distribution or apportionment. And that's what we have done so far. So Kaduna is 40,000. So when you add everything together, it will make up the 400,000. So that is that. Let me underline this one. So I will then come here, working number 2. Lagos is 280. The share of Lagos is 280. 80,000 for Benin. Then Kaduna is 40,000. The total fixed overhead in Kio is 400,000. So the difference would then be net profits, net profit or loss. So for Lagos, 410 minus 280, that should be 130. 78 minus 80 minus 2. 30 minus 40, that is minus 10. 518 minus 400, that's 118. Sorry, 118. So in the A requirements, examiner is asking you to prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. All right, like I told you, the only reason that we make a company to be thinking of deleting a segment is because the segment is operating at a loss. When you look at the operating results of Benin and Kaduna, you will see that Benin generated loss of 2,000, while Kaduna produced a loss of 10,000. That is why management is thinking of closing down Benin and Kaduna depots. Okay? So that answers requirement number A. Let's move to B. Requirement number B, you are to redraft the statement prepared above using contribution margin approach. Pay attention to this requirement. Requirement number A, examiner is asking you to prepare a budget from the figures provided, indicating why management is thinking of closing down Benin and Kaduna, because in the question, we are not given income statements. So, and we said that income statement will show profit or loss. That will tell us the reason why management is closing Benin and Kaduna depot. Now, that's what we have done so far. However, in this number B requirement, you are to redraft the statement prepared above using contribution margin approach. Examiner is not asking you to prepare profit or loss here. You are to use contribution margin approach. When you are using contribution margin approach, it means that you are supposed to stop at contribution for each of the depots. You don't prepare profits. You don't prepare net profit for each of the depots. You are supposed to stop at contribution margin. That is because you are using contribution margin approach. Therefore, I will then come here. This is requirement. All right. So in this number B requirement of the question, examiner is asking you to redraft the statement prepared above. The statement you have prepared in number A requirement, you have to redraft it using the contribution margin approach. And I said that In doing this, examiner is simply asking you to calculate contribution margin for each of the depots. The only thing you are not going to include is the fixed overhead, because once you include fixed overhead, it means that you are determining profits. Okay, so what I want you to do here is to prepare the contribution margin statement. All right. So I will then come here, requirement number 2. Requirement number 2, contribution margin. Examiner was specific. You have to use contribution margin statement. Again, this is not specific to any of the depots, so you are just asked to use contribution margin. All right. So in this case, you are not going to include fixed overhead for all the depots. You are less concerned with fixed overhead for all the depots. All right. So you are supposed to stop at contribution margin. So if that is the case, I will then come here. What's wrong with you now? Okay, so that's that. This is where you are going to stop for all the depots. Then, of course, for the company as a whole, the entire fixed overhead of 400,000 naira has already been incurred. So it is the company that will bear the 400,000, and that's why the 400,000 will go straight to the company, not relating to the depot. So every other thing will still remain the same. We are using contribution margin statements because of the fact that, your final answer for each of the depots will end at contribution margin. But for the company as a whole, this fixed overhead has already been incurred. It's going to be borne by the company. All right, it will be borne by the company. So everything will still remain the same. That answers number B, number 2 requirement. Is it number 2 or number? Okay, number A. This is A. This is B. Then number C requirement of the question, you are to prepare a statement using historical approach to show the net profit of the organization after closing down the 2 depots. Now the company wants to close down Benin and Kaduna depot that is generating loss of 2,000 as well as 10,000. The company wants to close down the depot. The owner has to prepare historical statements, okay, after closing down Benin and Kaduna. So if Benin and Kaduna depot are closed down, it means that only Lagos will continue in operation, okay? Only Lagos will continue in operation. Therefore, I can say, number C, I can say income statement for Lagos, or I can say income statement after closing down of Benin and Kaduna. However you want to put it, we are still saying the same thing. So in this case, I don't have anything to do with Kaduna again. I don't have anything to do with Kaduna because we are closing down Benin and Kaduna. What's wrong with you now? Okay. So that means only Lagos will continue in operation. What's wrong with you? I'm wasting my time. All right. So in this case, what is the implication of the, pay attention, please. The implication of this is that if you close down Benin and Kaduna depots, it means that only Lagos will continue in operation. Now, the fixed overhead that has been incurred, that fixed overhead of 400,000 that have been incurred, it means that only Lagos will bear it because you are no more operating from Benin and Kaduna, so the 400,000 must be apportioned to any subsisting depot. So the entire 400,000 will be borne by Lagos. Every other thing for Lagos will still remain. Okay, so 410 minus 400 will remain 10,000. That's it. That's it. That's it. So finally, you are now asked to advise the management based on the income statement prepared above. You have prepared 3 different income statements. The first one, our net profit for this organization was 118,000 naira. Then we're now asked to redraft the statement using contribution margin approach. The 118,000 net profit still remain. Then the second statement, you are told that if Benin and Kaduna depots are closed down, okay, we should prepare the income statement, historical statements, whatever it is, whether you call it budget statement, historical statement, income statement is the same thing. All right. So when you close down Benin and Kaduna Depot, the total profit of this company has reduced to 10,000. So that is that. Then finally, examiner is now asking you to advise the management based on the income statement prepared above. So now it's time for us to advise. Remember, we said that if it is positive contribution, do not delete the segments. When you look at our calculation, our income statement that we prepared using the contribution margin approach, you will notice that Benin and Kaduna generated positive contribution of 78,000 and 30,000 respectively. If you add the two together, 78 plus 30, that will give you 108,000. When you look at the net profit of Lagos, Lagos has reduced to 10,000. Lagos net profit has reduced to 10,000. Before, net profit of Lagos is 130,000. But because Lagos has bear the entire general fixed overhead, that's why the profit of Lagos has reduced to 10,000. All right, which is the profit of the company as a whole. So when you look at this 10,000 minus 118,000, that's about 108,000. So that 108,000 is the combination of the contribution of Benin and Kaduna. So I will then come here. I want to advise. We want to advise whether the company should close down Benin and Kaduna Depot. We then say, Ife Sinachi Limited should not close down Benin and Kaduna Depot because they are contributing positively towards the recovery of the company's general fixed overhead of 400,000 naira. Okay. If Benin and Kaduna depots are finally closed down, the overall net profits of Ife Sinachi will reduce to 10,000 naira. from the existing profits, from the existing profits of 118,000 naira. The difference, this shows that the difference of this shows, or the difference, let me put it this way, the difference of 108,000 naira, 108,000 naira in net profits represents the contribution from Benin and Kaduna, that is 78,000 plus 30,000. So those are the two. When you add the two together, that's 108,000. So the loss in profits, the difference of, let me reframe this. You reduce to 10,000 from existing profit of 118,000. The loss in profits, or the reduction in profits of 108,000 naira, represents the contribution from Benin and Kaduna. Okay, represent the total contribution. The total contribution of Benin and Kaduna. So we've already advised that the company should not close down Benin and Kaduna. So that's end of the question. So at this point, you can then begin to state your qualitative factor, even though the examiner is not asking you. So just pick it and then relate it with the question. All right, so that's that. Let me know if you have any question on this. Any question for me? Do you have any question on this? If not, then we'll move to make or buy decision. Okay. So in your material, I think that's I don't know, I will check again. If you are going to do any assignments, I will share with you. All right. So let's move to make or buy. Okay. So make or buy decision. When do you use make or buy decision? Okay. Don't know what's wrong with you. Wasting my time. Now, what do you understand by make or buy decision? Okay, because of time, let me just so that we complete all the explanation. Occasionally, the management of a company may want to know, maybe contemplating on whether or not a particular component, okay, on whether or not a particular component, raw material, sub-assembly, or components required for the production of the company's final products, should be manufactured internally or contracted to an outside supplier. Okay, you want to know whether you should make or buy a raw material, component, or sub-assembly that the company normally uses to produce or to manufacture its final products. Okay, the decision of this nature can be said to be critical, and strategic. Why? Because of the need to protect the degree of secrecy or proprietary information relating to the company's products, especially in a business environment where competition is highly stiff. All right. What we are seeing here is that a company is thinking of, is contemplating whether they should manufacture a component in-house or maybe they should outsource it. Such a decision at times could be critical to the company's operation. It could also be strategic, particularly because of the need to protect the degree of secrecy underlying the company's products. All right. So, because every product is unique. So what make the product to be unique is the degree of secrecy that the owner of the product has embedded in it. All right, that's what makes the product to be different from others in the market. So, if of course every business operating in a competing environment, all right, well, if you have more than one seller in that particular industry, that means you have competitor, right? So if your competitor get to know about the degree of secrecy underlying your product, the company may be out of the business, it may be out of business. And that's why we have said it is strategic, because of the need to protect the degree of secrecy underlying the company's product. Now, under make or buy, what are you supposed to do? Remember what I told you. Anything you want to do under short-term decisions must be examined in two different perspectives: the economic angle and also the qualitative factor. Okay. However, make or buy, make or buy decision is designed in order to save costs. Is designed in order to save costs and to ensure that materials is available, and to ensure that a reliable supplier is available to satisfy the requirements. Under this circumstance, or under make or buy, let me put it that way. Under make or buy, the most important thing to do is to analyze the decision, or is to analyze the situation in two different perspectives, as follows. So what are you supposed to do? The first one is quantitative perspective. So for make or buy, under quantitative perspective, what are you supposed to do? Very simple. Just compare the supplier's quotation with the relevant cost of making the component in-house, whether it will produce a saving or deficit to the organization. This represents this involves, let me put it that way. This involves comparing the supplier's quotation with the relevant costs of making the components, whether it will result in a saving or deficits to the organization. Okay. The table below can be used to prepare savings or deficits from making the components. Okay. What is the table? Deficits. All right. What is the table? Let me just copy the table I have before. Let me copy any of this. Don't waste my time. What's wrong with you? Performance management is sweet if you know your way. All right. So you then come here, saving or deficits from making the components. Okay. Let's say something there, all right. With this. All right. So the first item here will be the supplier's quotation. You want to compare supplier's quotation. Quotation. Okay. Whatever it is, as supplier's quotation, it will be given to you in the question. Put it there. You then compare this with relevant costs of making the components. For the relevant costs, you go to the question and pick. If you are given the raw material, you put it there. Okay. Let me make it two. Should I make it two? That's okay. So you close this one. Why are you wasting my time with this thing? Let me use this. Okay. So let's say this is A. Come on. Since I came back, I've not heard from you guys. Are you with me? Say hi if you are with me.
Yeah, with you, sir.
We're here, sir.
We're here, sir.
Okay. All right. Thank you. I want to be sure that I have people that are supporting me. I'm not alone. All right. So you go back to the question. If you are given any direct material, you post. You consider direct labor. If you have any, you post, right? You check again if you have direct expenses. Direct expenses from the question, you post. If you have variable overhead given to you, then you post. It is possible you may have variable selling expenses relating to the make or buy, all right? Whatever the expenses that you have, all right? So let's say you have opportunity cost as well. Opportunity cost. Any opportunity cost, you post it. If you are given incremental costs, right? We are given incremental or direct or specific or attributable fixed cost. All right. So you consider it, provided the fixed cost is relevant, any relevant cost irrespective, provided the cost is relevant to the component, then you have to consider it. You then add up everything together. So this will give you total relevant cost. So this will be total relevant cost. You then compare the total relevant cost. What's wrong with you now? Total relevant. So you then compare this total relevant cost with the supplier's quotation. This is the B. We compare with supplier's quotation whether to produce a saving or deficit. Why are you wasting my time now? Okay. Let me. One minute. All right. So this will then give us either savings or deficits. Okay. This should be either savings or deficits. Deficits. Okay. If it is savings, it will be positive. If it is deficits, it will be negative. All right. So that's all you need to do. That's all you need to do. The next you need to do now is decision rule. Okay. So decision rule. What are you supposed to do? When you do your calculation under make or buy, what are you supposed to do? Decision rule. Number one, if A, that is supplier's quotation, let me put it this way. If suppliers quotation that is A is greater than relevant costs of making that is B, what are you supposed to do? You make, let me use capital letter, you make. Number two, if A is less than B, if A is less than B, what are you supposed to do? You buy. All right. Then C, if A is equal to B, what are you supposed to do? The company can either make or buy, depending on other qualitative factors. Depending on other qualitative factors. So that's the decision rule. As far as make or buy decision is concerned, anytime you have done your calculation, an examiner is asking you to advise whether the company should make or buy the components. So after you have done your calculation, if supplier's quotation is higher than relevant costs, you are going to advise that the company should make the component internally. But if supplier's quotation is less than the relevant cost of making the component in-house, that means it is cheaper for the company to buy it. Okay, but at times you may have zero. At times your supplier's quotation may equal to relevant cost of making it. Under that circumstance, you need to refer to qualitative factors. It is qualitative factor that will then determine whether the company should make or buy the component. Okay, so finally, what are the qualitative factors under make or buy? So that's where we are going to stop today. So qualitative factors. The following qualitative factors should be considered under make or buy decision. Now, pay attention to this, or to what I'm about to say. You have to understand what you are doing. That's why I usually advise students that please limit your memorization of concepts. The key thing is for you to understand the concepts. Stop memorizing things, stop cramming, because if you cram, there's limit to which you can do. You cannot freely express yourself when you cram things. But if you understand the concept, you'll be able to write it the way you the way you'll be able to express yourself freely in the way you understand it. That's the way it should go. All right. Now, why am I saying this? When you are stating your qualitative factors under make or buy decision, you have to think outside the box. If you want to make the component in-house, what are those factors you need to consider? If you want to buy the components from outside supplier or you want to outsource it, what are the factors you need to consider? The two of them combined together will show you, we represent the entire qualitative factors that you are going to indicate in the question. So anytime you want to state your qualitative factors under make or buy, you need to look at the perspective of the company as well as the angle of the supplier. So you then you combine, you align the two together. So if you like, you can do like 2 or 3 for the company, then you do 2 or 3 as well for the supplier. So that's what you are going to do. So think about this, that okay, you are new. Let's say, for example, you are new in the business. You want to produce you want to manufacture components in-house. What are those factors you need to put into consideration? What are the factors you need to consider? Of course, you need to, the first one is whether you have the requisite technical know-how or expertise to produce, right? If you don't know how to produce, if you don't know the mix of your product, how will you be able to produce, right? So you need to consider whether the company has the requisite in-house technical know-how or expertise. So under make or buy, the qualitative factors is more like questions, asking pertinent questions. All right. So you can say, do we have the requisite technical know-how or expertise? Technical know-how or expertise to produce the components in-house. Okay, it's a kind of question. Components. All right, that's number 1. there's one thing for you to, as a company, there's one thing for you to have the technical know-how to produce. It's another thing for you to have the required manpower to produce, because there is difference between you have the expertise and you having the labor that will do the job, all right? So you also need to consider that. Do we have the required manpower to produce the components, internally? Okay. All right. That's another question you need to ask yourself. If you have the expertise, but you don't have the manpower, what do? You recruit, you employ labor that will do the job. All right. Then number 3, let's consider the perspective of the company first before we talk about the external supplier. Then number 3 is that, are we permitted by law? You need to consider the regulatory aspect of it. Are we permitted by law to produce the components? Okay. Are we permitted by law to produce the components in-house? The components in-house in addition to the company's final products. Okay, you want to be sure that the law of the land permits you to produce. Also, the degree of secrecy, or proprietary information uh, let me put it this way, the need to protect the degree of secrecy or proprietary information underlying the company's products. Okay. Company's products is another factor you need to consider. Number 5. Now, you say you want to produce this component in. Do you have sufficient capacity to accommodate the components in-house? Okay, so you need to consider that. Do we have sufficient storage space to accommodate the components in-house? So you have adequate storage capacity. What do? It's either you rent a space for you to be able to accommodate that, or you manufacture the components consistent with your capacity. Okay, so these are some of the factors you need to consider as a company. All right. Not only that, you also need to consider the need to maintain high quality of the products. They need to maintain high and better quality better, let me just, to maintain better quality of the components. Okay. So at times, because because you are not sure of what the external supplier will do. So, and because maybe the company is already producing the components, you are not contemplating on whether you should outsource it, you should give it to an external supplier, but you are not sure if the external supplier is going to maintain the existing quality of the product. So in that case, you may decide to continue producing it. But if you are certain that, if you are sure that the outside supplier will continue with the quality, will maintain the existing quality of the product, then you can outsource. So the need to maintain the better quality of the components should be considered, all right, before final decision is taken, considered. Then, on the perspective of the supplier, you also need to ask yourself, if we have a reliable supplier who can deliver according to specification, so you need to ask, do we have a reliable supplier who can deliver according to specification? What this simply means is that as I want it, let's say, for example, you have a marker, for example, you are a producer of marker, and then you want to outsource it to another company to be doing it on your behalf, so that you can concentrate on the areas of the business that are critical to achieving the organization's objective. So in doing that, you have a sample already, you have your specification. You then want to be sure that this external supplier can produce the products based on your specification as you want it, based on your own design. All right. So that's what I mean by this. Do we have a reliable supplier who can deliver according to specification? It's a question that is begging for answer. The next one is that, even though we have a reliable supplier, but can the reliable supplier satisfy the company's existing capacity level, the company's existing capacity level, especially if the components is critical, to the company's normal operation, all right, so there cannot be any delay. Now, if I say, what this simply means is that if the companies wants 100,000 kilograms of the components, the supplier must be able to deliver 100,000. Not that you are requesting for 100,000 and the supplier will say, okay, let me bring 60,000 now. I will bring the balance of 40,000 later. So that may disrupt the company's activities. That may disrupt the company's operation to happen. So you want a reliable supplier who can satisfy your existing capacity level. All right. So that's what I simply mean by that. Then, of course, there are more than the list can just continue. But the bottom line is that what I'm trying to establish here is that I don't want you to cram it. Anytime under make or buy decision, anytime you want to state your qualitative factors, you need to look at the perspective of the company and also the perspective of the supplier. Then you align the two together, you integrate the two together. Okay. But when you are doing this, on the day of your exam, when you are doing this, you need to consider, okay, you need to link it with a question. Don't make your answer generic. Don't just copy what you have in your notes and dump it for the examiner. You need to link it with the question. Okay, it is only when you do this that you are going to earn your full mark. Okay, so that is that. This is where we are going to call it a day. In our next class, by the grace of God, we are going to be having calculation on this. All right, we are going to have calculation on this. I think the last time I tested make or buy, was it 2021 or 2022? I can't remember. I will check. All right, but we'll solve it in our next class by the grace of God. So let me know if you have any question for me so that I can release you. This is where we are going to call it today. Any question for me? Some of you have disappeared. It's okay. No worries. Well, let me see. Yes, Choma Fobezel is still here. Choma Udeze. All right. I can see Ame, Michael, Erima, Ezine, Frances, Frank. I can see Blessing, Gracified. I can see Kingsley. I can see Ansin, Ansihame, Chisholm, Miriam, Faith, Oluwafemi, Onukul, Amarachi. I can see Lukman, Oyindamola. I can see Reginald, Shola, Pelumi has disappeared. I can see Valentina, Vartor is here with me, the Zoom user. Thank you, every one of you, for waiting behind. This is where we are going to call it a day. In our next class, we are going to do